Hello everyone, my name is Laura, and on behalf of the Colorado Department of Revenue, welcome to our November 2023 Sales Tax Legislative Changes webinar recording. Thank you for taking the time to learn more about recent legislative updates and how to be voluntarily tax compliant. You can pause and replay this video at any time to review the information provided. Let's go ahead and get started. In today's webinar, we'll cover the 9 sales tax bills that have relevant changes for the current or upcoming tax years. The bills we'll be covering today include House Bill 23-1017, Electronic Sales and Use Tax Simplification System, Senate Bill 2251, Policies to Reduce Emissions from Built Environment, House Bill 22-1039, Sales and Use Tax Exemption Form Simplification, House Bill 22-1118, Sales and Use Tax Refund, Senate Bill 2232, Simplify Local Sales and Use Tax Administration, House Bill 23-1240, Sales Use Tax Exemption Wildfire Disaster Construction, House Bill 23-1015, Taxation Tobacco Products Remote Retail Sellers, Senate Bill 23-143, Retail Delivery Fees, and Senate Bill 23-280, Hazardous Material Mitigation. While these are not all of the bills passed in this legislative session, we are focusing on bills that will have the most impact on Colorado taxpayers. Some of the bills we'll be covering have impacts on both sales and income tax, so while this webinar focuses on sales tax, we may mention income credits as they apply to these bills. Upon completion of this webinar, you should have a better understanding of current and upcoming sales tax legislative changes and know how to navigate resources and tools that are available to you. Our motto is to always help, and our mission is to promote voluntary compliance with tax laws through education, assistance, and customer service. When it comes to helping you be voluntarily tax compliant, we are always happy to help. There are a wide variety of resources and tools at your disposal, including our websites, Tax.Colorado.gov and Revenue Online, the Taxpayer Helpline and SUTS-specific support line. You can schedule an appointment with a tax examiner at one of our local offices, which are located in Colorado Springs, Denver Metro, Fort Collins, Grand Junction, and Pueblo. All of our local offices are now open to the public via walk-in or by appointment, and each of our locations also have drop-off boxes if you need to drop off a form. We also have the department's FYIs and guidance publications and our taxpayer email. Let's begin today's webinar by highlighting the department's family of websites. The department's family of websites includes Your Colorado Life, which stands for Links and Information for Everyone. This educational website provides Colorado residents with information on several topics varying from the history of taxes to starting a business. We also have our main website, Tax.Colorado.gov, and Revenue Online, which is an administration portal that you can use to make payments, file returns, find sales and use tax rates, and locate other helpful links for your account. All of these websites are great resources that provide a wealth of information if you ever have a question or need assistance. I'd also like to take a moment to highlight a few other places where you can keep up to date on what the Department of Revenue is doing. On LinkedIn, our YouTube channel, which has tutorials and walkthroughs, Facebook, and on Instagram, which has weekly tax tips, reminders, and helpful hints to make being voluntarily tax compliant so much easier. Now, we'll discuss recent legislation changes and how they may impact you. The first bill we'll cover today is House Bill 23-1017, Electronic Sales and Use Tax Simplification System. The Sales and Use Tax System, or SUTS, will be improved and updated by January 1st, 2025. Some of the planned modifications include being able to populate a local account number on all returns and summary reports if the retailer has obtained and provides the local account number in SUTS. Developing a simplified user interface for filing returns as an alternative to the current spreadsheet method. To provide retailers with a bulk testing option for addresses filed, and to include additional use taxes, additional information about deductions, filtering options, and certain tabs. Changes are being implemented during fiscal year 2023 through 2024, and we will have a SUTS-specific webinar in the spring of 2024 to share important updates with you. More information will be posted on this bill as it becomes available on the Tax, Education, and Training webpage. We'll now take a look at Senate Bill 2251, Policies to Reduce Emissions from Built Environment. This bill will have several changes after 2023, so I'd like to remind you of our webpage for environmentally friendly tax credits. This webpage can be located from our homepage, Tax.Colorado.gov, and by selecting the button under the Climate Friendly Tax Incentives banner. Senate Bill 2251 also makes several changes to income tax and sales tax codes. This bill created an income tax credit for heat pump systems and heat pump water heaters. It's for the current tax year, 2023, and the credit is equal to 10% of the purchase price paid by the purchaser. This tax credit is only available in tax year 2023, and that's because House Bill 23-1272 made a new version of this credit that is going to be available to the sellers of heat pumps in 2024. To learn more about House Bill 23-1272, you can visit our Climate Friendly Tax Incentives webpage. I'd like to point out some helpful information regarding this bill because how the credits are assigned matters. For example, if I purchase a heat pump system to use in my home and I don't assign the credit to the seller, that is a non-refundable income tax credit on my tax return. However, if I purchase a heat pump system to use in my home and I do assign the credit to the seller, then the credit is refundable on the seller's income tax return. This bill created a second income tax credit, and that is for the installation of residential energy storage systems in 2023 and 2024 income tax years. Energy storage systems are defined as any commercially available, customer-sited system, including batteries and the batteries paired with on-site generation that is capable of retaining, storing, and delivering energy by chemical, thermal, mechanical, or other means. This tax credit is equal to 10% of the purchase price paid by the purchaser. Senate Bill 2251 also created 3 sales and use tax exemptions, which are as follows. The first one is for eligible decarbonizing building materials on or after July 1st, 2024 through June 30th, 2034. The Office of the State Architect will be developing a list of materials that qualify, so be on the lookout for that information. There is also a sales and use tax exemption for heat pump systems and heat pump water heaters on and after January 1st, 2023 through December 31st, 2023. I'd like to take a moment and bring attention to the end date here, since this exemption will be going away at the end of 2023. Lastly is the sales and use tax exemption for residential energy storage systems on and after July 1st, 2023 through December 31st, 2032. As portions of this bill become applicable in the coming tax year, the Office of State Architect will be a great resource to visit if you would like more information regarding this topic. The Office of State Architect's website is osa.Colorado.gov, and their email address is dpa_statebuildings@state.co.us. Another important piece of information regarding this bill is that there are 2 new forms for reporting credit assignments. The first form is the DR 1307 Residential Energy Storage System Credit Eligibility Certification and Assignment Election. This form includes information on eligibility to claim this credit, system requirements, option to assign the credit to the seller, and instructions to submit the form. The second form is DR 1322, Heat Pump System or Heat Pump Water Heater Eligibility Certification and Assignment Election. This form includes information on eligibility to claim this credit, system requirements, installation requirements, options to assign this credit to the seller, and submission information. Both of these forms are available on Tax.Colorado.gov under the Forms tab. The next bill we'll cover is House Bill 22-1039, Sales and Use Tax Form Simplification. House Bill 22-1039 allows the Department of Revenue to simplify exemption forms and requirements to decrease the burden of claiming a sales and use tax exemption. In simplifying these exemptions, some forms may be consolidated or even eliminated. The forms on the Forms page of our website always contain the most current version of our forms, and you can continue to reference our Sales and Use Tax webpage for the latest news regarding this bill. Here is a quick glimpse at some of the forms that have been eliminated. If you would have filled out the form DR 716, you'll now use the form DR 715. If you would have previously filled out one of the forms in that red box, you'll now use the form DR 5002. The DR 715, 5002, and 172 have been revised to reflect the consolidation and elimination of other forms. Next, we'll discuss the changes surrounding House Bill 22-1118, Sales and Use Tax Refund. House Bill 22-1118 made some changes to claims for sales and use tax refunds. This bill applies specifically to sales tax paid by a purchaser to a vendor and changes when interest is accrued on sales and use tax refund claims. Interest now accrues from the date the refund claim is filed instead of the purchase date. This bill also creates civil penalties for buyer-purchaser claims that are materially incomplete, duplicative, and/or lack a reasonable basis in law or in fact. Here's a helpful hint. Please be advised that submitting incomplete or inaccurate claims could result in penalties from the Department of Revenue. Incomplete claims are defined as claims that do not include the form and substantially all of the pertinent data, information, and documentation required by statute and/or rule. We certainly don't want this to happen to any of you, so please be sure that you are submitting complete and accurate claims. If you are ever unsure or have a question, we have our taxpayer service centers and call center available to help you. This bill requires the Department of Revenue to notify the purchaser or preparer that the claim appears to be incomplete and specify what information or documentation appears to be missing. The purchaser or preparer will then have 60 days to correct or withdraw the refund claim before the Department of Revenue assesses the penalty. This is applicable to sales made after July 1st, 2022, but before July 1st, 2026. Next on the horizon is Senate Bill 2232, Simplify Local Sales and Use Tax Administration. Let's take a look at new changes associated with this bill. Senate Bill 2232 requires the state to use SUTs to create or allow a universal statewide retail business license. This bill requires local governments to not charge a fee for a local license if a business has a statewide license but no physical presence in that local jurisdiction. It prohibits local taxing jurisdictions from charging a general business license fee to retailers who do not have a physical presence but only have an incidental presence in the taxing district, such as food truck vendors or retailers who deploy employees or agents to a specific tax jurisdiction for commission or sales-based work. In other words, A retailer that has a state standard retail license and either does not have physical presence within a local taxing jurisdiction or has only incidental physical presence can make retail sales within the local taxing jurisdiction without having to obtain a general business license from the local taxing jurisdiction. This bill will allow the state and local governments to ensure that businesses are licensed and help businesses that only have incidental presence from having to obtain a license in each local taxing jurisdiction. Since this bill will have several changes occurring before being implemented, it'll be important to know where to find information as it becomes available. There's the Sales and Use Tax webpage, the SUTS FAQ page, the SUTS video library, and the paper form DR 1002, which has Home Rule contact information if you need to connect with a Home Rule city. Next, we'll discuss House Bill 23-1240, Sales Use Tax Exemption Wildfire Disaster Construction. House Bill 23-1240 was passed to help provide relief to those who were living in a declared wildfire disaster and are rebuilding their homes. This bill allows a refund of state, RTD, and SCFD sales tax paid to a qualified homeowner. The sales tax refunded must be from rebuilding or repairing a residential structure damaged or destroyed by a wildfire that was declared a disaster emergency by the governor. This applies to wildfire disasters that occurred during calendar years 2020, 2021, or 2022. There are 16 locations that fall under this exemption, and they are highlighted here in the red box. To take a closer look at these locations, you can reference page 1 of the paper form DR 992, Application for Wildfire Rebuild Exemption Certificate. A refund is allowed only if the replacement cost of the qualified residential structure exceeds the homeowner's coverage under any insurance policy associated with the structure. This bill allows qualified homeowners to receive a refund of 4% of the estimated construction and building materials cost listed on the building permit. It is important to note that individuals who had their home damaged or destroyed by a wildfire that was declared a disaster emergency by the governor between the years 2020 through 2022 will need to apply for a wildfire rebuild exemption certificate from their local government with a copy of the building rebuilding permit in order to have this refund issued. The process that must occur in order for a homeowner to receive a refund is obtain a building permit to repair or rebuild the residential structure affected by the wildfire. Complete and file the paper form DR 992, Application for Wildfire Rebuild Exemption Certificate. Upon receipt of a completed Form DR 992, an authorized official will complete the Form DR 993. To claim your refund, you'll complete Section 6, Wildfire Refund Claim, on Form DR 993 that the local government issued to you. We just covered a lot of information regarding House Bill 23-1240, and now we'll move on to House Bill 23-1015, Taxation Tobacco Products Remote Retail Sellers. House Bill 23-1015 has two main updates which we'll discuss in detail momentarily. To give a brief overview of the bill, it clarifies the definition for a delivery or remote retail seller and manufacturer's list price. I'd also like to highlight that this bill will go into effect on January 1st, 2024. In clarifying the language surrounding this industry, this bill clarifies the definition of manufacturer's list price. So what it really means is that for delivery or remote retail sellers, manufacturer's list price is the average of the actual price paid, exclusive of any rebates or discounts applied, for the tobacco products stock keeping unit during the preceding calendar year. For a manufacturer who is also a delivery seller, the manufacturer's list price is the manufacturer's cost to manufacture the tobacco product, which includes the manufacturing overhead and the cost of all direct materials and direct labor used. I would like to point out that using the manufacturer's list price is optional and not required. This bill also clarifies that a delivery seller's license does not apply to pipe tobacco and cigars. House Bill 23-1015 defines a delivery seller as someone who is located outside of Colorado and makes delivery sales into the state. Lastly, this bill creates a new license type, remote retail sellers, and this license is for out-of-state sellers who sell pipe tobacco or cigars. That wraps up legislative changes on House Bill 23-1015, which brings us to our next bill, Senate Bill 23-143, Retail Delivery Fees. Before sharing specifics about this bill, let's take a look at what the retail delivery fee is. All retailers licensed to make sales in Colorado and who sell taxable items that are or will be delivered by a motor vehicle to a location in Colorado, including deliveries made by a third party, are required to charge, collect, and remit the fee to the Colorado Department of Revenue. The fee is 28 cents per retail sale for delivery. The retail delivery fee is charged to the purchaser and collected by the retailer, who then remits it to the Colorado Department of Revenue. For example, a marketplace facilitator must collect the fee on behalf of any marketplace sellers selling through their marketplace. The fee is collected, administered, and enforced in the same manner as your sales tax. Returns will be due by the 20th day of the month following the reporting period, which is based on your sales tax filing frequency. So your retail delivery fee will be due at the same time as your sales tax return. You'll file the retail delivery fee on a separate form, the DR 1786 Retail Delivery Fee Return. Retailers that do not make any sales of taxable tangible personal property for delivery by motor vehicle to a location in Colorado are not required to open a retail delivery fee account. You can break the retail delivery fee down into two questions. Is sales tax being collected on this sale? And is the product being delivered by motor vehicle? If the answer to both of those questions are yes, then the retail delivery fee applies when sales tax is collected. Senate Bill 23-143, Retail Delivery Fees, was effective as of July 1st of this year and retroactively applies to July 1st, 2022. This bill creates a small business exemption for retailers who sell $500,000 or less per year in retail sales, excluding wholesale sales, from having to report or remit the retail delivery fee to the department. This bill also allows retailers to elect to pay the fee on behalf of their customers. In other words, this would allow any retailer who chooses to absorb the retail delivery fee and pay it for each delivery, rather than collecting it from the customer and having to state it separately on the invoice or receipt. More information on Senate Bill 23-143 can be found on the Retail Delivery Fee specific webpage. We've arrived at our next bill, Senate Bill 23-280, Hazardous Material Mitigation. This bill will be relevant to any clients who pay fuel excise. Senate Bill 23-280 creates a new fuels impact reduction fee, which is 0.006125 cents per gallon, and this went into effect on September 1st, 2023. The fee is paid to the state of Colorado and will be collected on the same fuel excise filing schedule as filed by fuel distributors. We've arrived at our final bill, Senate Bill 23-16, Greenhouse Gas Reduction. Senate Bill 2316 creates a refundable income tax credit for qualified retailers of electric-powered lawn equipment. The purpose of this bill is to incentivize the purchase and use of electric lawn equipment to replace comparable gas-powered equipment and reduce greenhouse gas emissions. This credit will be available for tax years 2024, 2025, and 2026. What can retailers expect from this bill? As a qualifying retailer, you are eligible for a tax credit equal to 33% of the purchase price for all retail sales of new electric lawn equipment sold in Colorado during the tax year. You must pre-register with the department to confirm your eligibility before making sales that would qualify for the credit, and you must report your sales to the department on a quarterly basis. This credit will be claimed on tax returns for retailers making sales of qualifying equipment. Qualifying electric-powered lawn equipment may include lawnmowers, leaf blowers, trimmers, and snow blowers. There is only one way for a retailer to register as a qualified retailer, and that is by using Revenue Online. Please be advised that you must register to be a qualified retailer before you make any qualified sales. Otherwise, the sales will not be approved for the credit. The steps a retailer will take to register are to log in to your Revenue Online account, locate your income tax section, locate the account box, then select additional actions in the credit registration section, and there you'll see the option to register as a qualified retailer. You'll also see the link for the credit you are registering for and provide all required information and submit your registration. Once the department receives this information, the retailer will then receive a letter indicating the status of their registration. As a retailer, the credit will be claimed on your tax return. 3% of the purchase price may be kept by the retailer as an administrative fee, and the remaining 30% must be deducted from the sales price, stated separately on the receipt or invoice, and provided as a discount against the purchase price for the customer. What might a consumer expect when purchasing a qualifying product? A consumer may see a markdown of 30% of the purchase price at the time of purchase, if buying from a participating retailer. There are a wide variety of resources and tools at your disposal to help you be voluntarily tax compliant. We have our websites, the Taxpayer Helpline, and SUTS-specific support line. You can schedule an appointment with a tax examiner at one of our local offices, which are located in Colorado Springs, Denver Metro, Fort Collins, Grand Junction, and Pueblo. All of our local offices are now open to the public via walk-in or by appointment, and each of our locations also have drop-off boxes if you need to drop off a form. We also have the department's FYIs and guidance publications and our taxpayer email. The dates and values used in this recording are for illustration purposes only. Tax rates are subject to change over time. Again, my name is Laura, and I'd like to thank you for your kind attention and for taking time out of your day to learn more about Colorado sales tax legislative changes. I hope I gave you a clearer picture of how to be voluntarily tax compliant. It was my pleasure to serve you. Thank you.